Good evening, everybody. This is Jeff Scott, and today is April 14th, the day before tax day. And welcome to this afternoon's webinar. I will be posting this probably around dinner time, so hopefully you'll have a chance to review it this evening before you go to bed, if you so care to. Last week I called it, or commented about from how oversold we were, and I expected a bounce. Had more of a bounce than maybe even I suspected, and now we've gone from oversold to overbought. And the question is, well, when? I'm being facetious. Obviously, when I said, will we ever correct? But really, the question is, correct, or how soon will we correct? I certainly expect a correction, as does everybody else that I listen to personally. Hold on 1 second. I have a technical error here. I do want to have this thing plugged in while I'm doing the recording so I don't lose power. All right. So very briefly, the PowerPoint for today. Disclaimer, this is for educational purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker, and I'm not affiliated with any software vendors or trading companies. I show you the tools that I use on my own, and I do this for my benefit, not for anybody else's. My benefit is this really forces me to critically look at what I do, and it gives me an archive to go back, and I learn by doing these as much as anybody else does. I may but reality is I need a real-time trading platform. Fortunately, I'm stuck with two because I've done a lot of work in both of them, and I can't replace one with the other yet. I need an analysis program, which I use HGSI, which we'll use extensively tonight. I'll show you how I use EdgeRater for some market timing. If time allows, I'll look at some seasonal analysis. And then I've learned a lot from Ian Woodward and Ron Brown of Woodward and Brown Investing, and I'll show you where you can find some of their tools on the web. The things that I first learned from Ian is he liked to tell me that he is not a guru and that we need to find our own gurus. And I think, be our own gurus, not find our own gurus, but be our own gurus. And I think that was some of the best advice he ever gave me. And so I've tried to build my own internal guru by learning from others that I find to be quite smart, whether it's Ian Woodward and Ron Brown of HGSI, Alexander Elder, here's some of his books here, Van Tharp, Position Sizing Money Management. William O'Neill really wrote the Bible for me on growth stock investing and how to make money in stocks with CanSlim. And then O'Neill disciples Gil and Chris, and they're two excellent books. And then I use Bigelow as my candlestick guru. Obviously, there are others in the marketplace as well. Websites are listed here. You can stop it if you want to look at those. I make the mistake of often calling something a buy. I don't know what I'm going to buy tomorrow. It's 4:15 on Sunday. The futures are not open yet. I'm going to go the direction of the market. I'm going to create. Actually, I'll give you my philosophy right now. I'm going to create this evening, or I've already created, a list of fundamentally strong stocks that are setting up the way I like to buy them. And I'll show you some of those setups as we go on. I am then going to do scans live in the market, watching these stocks, but also looking for other stocks that will do things such as having viable gap ups. And then based upon a setup and then a trigger, I'm likely to buy or sell things tomorrow. Now, I use some automation from Market Gauge, Never Lost Trading, and others for my triggers. And a lot will depend on what the market bias is. If the market opens up and continues to trade down, I'm not going long. I'm not likely going long. I might go short. I might buy puts. I might go some contra ETFs. On the other hand, if we get days like we've had the last couple where the market initially trades lower and then starts trading up throughout the day, those are my favorite days. Hopefully you made a lot of money this week, as I did. And if the market roars with a big gap open and then trades lower the rest of the day, that's going to affect what I do as well. So a lot depends on what the market does. I use multiple time frames, and that's just how I do things, and everybody has to do their own thing. As usual, we'll do my weekend review, which will spend a lot of time looking at the market. Then I'll show you my personal approach to top-down investing. A lot of overlap, but some differences between Ron Brown and I, who put out an excellent movie today on this. I'll show you my shortcuts that I look from a bottoms-up approach, and then intermittently I'll show you how I use some of these other programs. Here's Ian and Ron of Woodward and Brown Investing, and let's just go into the website and then jump into the program. All right, so as I said, too many icons, and say bye-bye. I made them disappear, so they'll no longer be a distraction. www, for those who don't go to my YouTube site, it's under my name, Jeffrey Scott. You could tell people are getting nervous about the market because there's been some drop-off over the last week of viewers. Perhaps it was vacation week. We'll see if we can't get our number back up to where it was when the bull market was really kicking its heels. So if we go into the Highgrowth Stock website, which is www.highgrowthstock.com, you can see you can get a trial for free. You can duplicate everything that I do. Make sure if you've loaded the software that you go to the Learning Center and under add-ons and you install at least the first three, the filters, the smart groups, and the optional user groups. And you can install them all and then update the program and they'll be incorporated. And that will make what you do look a lot like what I do. Pretty much everything that I do, although they might be in different places, will be there. On the website, Ron Brown's market reports are under reports, as are my weekend reviews like this one. This one will be posted there as well. It's a good place if you want to go back and find them. You have the ability to either watch them live on the site or download them in HD from here as well. And then Ian's blog is just a wealth of information. I've learned to get excited or nervous based upon the frequency of the blogs. He gives you warnings in advance, but when he starts to give you lots of blogs, you know the market's direction is going to change. And here's one from April 11th. I expect that we'll be lucky and get another one tonight. So enough of the background, and let's jump into the fun stuff. So let's review the week that we had. And as I mentioned before, this was a good week to be long. I had made quite a bit of money in one of these things. I never really trust some of these things that send me notes, but I got my accounts linked to something. It said I was up 5.4% for the week. That looked about right. The market itself was up about 2.7. As you know, I look at some different ways of measuring how I do. And one of the things that I like to look at is a basket of stocks, assuming that I bought them a week ago, and to see what happened from close of Friday on the 5th to close of Friday on the 12th. And then I put them together, and did I not bring them over here? Let's see. I thought I brought them. Maybe I didn't. Transfer. Let me just stick it into my Dropbox. I have it over here. Somehow I forgot to transfer this. Here it is. I don't know if you guys use Dropbox or not, but to me it's been just a great tool, especially if you have lots of computers. I usually take my files that are that I want to move around, and I just drop into Dropbox, and whenever I open up my other computer, they'll be in there. So hopefully we'll see something pop up. So I usually, there it is. So let's go ahead and let's open that puppy up. So File, Open. So one of the things that are inside HGSI is this thing called the Group Performance Analysis. So what I have here is a large number of groups that I monitor. And then what I try and do with these groups, all right, that's not doing what it's supposed to do. Well, we may have a problem there. All right. So I'm going to stop the tape for 1 second and sort this out. I'll be right back. I've got a lot of different watch groups that I like to use. And I basically measure performance from close of the week before on Friday, so end of day Friday, to close of the week this week. And then I like to see what's working, what's not working, and it starts to help form what I'm going to do in the market. So the first thing you notice is that black is good and red is bad. That very few groups did poorly. Now, one group to highlight would be the red candle highs, where in a market that's moving up, if you have a red candle high, that might be the sign of a stock or a market that wants to correct. So think about this. You set a new high, or at least a 20-day high, 10 to 20-day high, but you closed below the open. So you failed at that high. And you could see in a very strong market, the 4 stocks that had red candle highs actually were down 5.58%. That's kind of interesting. We'll look at green candle lows in a second. So most things were up. Now the stocks that were in my portfolio at end of day Friday, which was a balanced portfolio, were up 2%. But as I mentioned, and I mention every week, I don't necessarily have those stocks on Monday at the close. And I added stocks, and as I said, my performance was a little bit over 5%. The S&P 500 was up 2.29%. And if we look at some other things that I find interesting, the HGS 100 was up 3.43. The IBD 50 was up about 4%. Obviously, not only a strong market overall, but the reason why I was up a lot is because I trade growth stocks, and growth stocks had a great week. Now, one of the things I look at with the group inclusion filter, which we'll look at today, is I like to look at the top 30 or so. This time I had 26, which means the next ones were, there was too big of a group to pick 4 from. And we'll show what I mean on that later. And you can see that 3/4 were up, and they were up 4.72%. This was clearly a week by picking the best stocks you would have done well, such as Woodward and Brown, which was up 7.53%. Now, last week, the best stocks didn't do great. So leading stocks led, Bondo stocks, Tim Higgett filters stocks, which is typically a high performance, although it was only 2 stocks were up there. Pullbacks, both waiting for a signal and ready to run, outperformed the market, but did less than some of the leaders. Top VectorVest stocks, so top 100 stocks using the VectorVest BST system also did very well, up 3.46%. Green candle lows were up 2.07%, slightly underperforming the S&P 500. Perhaps this was a week where stocks that were doing better outperformed the market versus than just bottom feeders. And I think I wanted to go look specifically to 927. So this program prints this out. I don't do this on my own by any means. Something I wanted to show you here is, okay, the buy watch. So if you were on last week or you watched my video, I went through a lot of stocks that I thought looked exciting. And what an outstanding week to be long. Not only was it up 3.2%, but 73% were up, 30 gainers to 11 losers. And with no money management, 3.2% in 1 week is not a shabby week. And what really is exciting is we have 4 stocks above 10%. Nexstar Broadcasting, Energy Partners, EPL, Carix, and Perion Networks. So if you were long any of these, or frankly if you got into them on Monday, you would have done very well. As I look through here, housing, I think this may be the week housing jumps up, but several housing-related stocks were in the underperformers. So I use this tool to give me a sense of what the market did over the last week. I use the EdgeRater market timing system to give me a sense of where it might be going. So I'm going to throw into this S&P 1500, and I am going to now go into, and the numbers will vary when you do this on your own based upon filters that you might have. I'm going to look at my buckets report. So again, I'm going to try and see within the Bollinger Bands what percentage of the stocks are at the various deciles, and then what percent are above or below. And last week I commented about 45% were in the lower 20% or below the lower band, which is why I knew the market was getting close to where it wanted to snap back, and it did. So let's just go into templates and hit run, let it run its thing, and very quickly you're going to see where we are, which is almost the inverse of where we were last week. So could be something that might make you a little bit concerned. 60-40, not overly done, so a little bit over 60% of the stocks are above the midline in the Bollinger Bands. What's interesting, you got 9% were above, 12, about 42% were from the 70 to 80, 80 to 90, 90 to 100, or over 100%. So you do have a fair number of stocks that are getting overbought, but probably not yet to an extreme. And if we just go back 5 days, see a little bit more of an extreme on Thursday. 68 dropped to 60, and you have 16% above, 14%. And this is what it looked like on the 9th, 8th. Here's where we were last week. As I said, almost the inverse, where you had more red than green, and you had the majority of the stocks in the last 4 buckets. So the last 4 buckets this week, and the top 4 buckets, last week rather the top 4 buckets this week. So sort of a mirror effect, and like I said, it was a good week in the market. For those that don't have this program, it allows you to do things such as look for pocket pivots and viable gap ups. And I'll just run it on all securities so you can see how fast it is. And you can actually update your list during the market with Yahoo quotes. And this could be a relatively low-tech and low-expensive vehicle for in-the-market checking for pocket pivots and viable gap ups. Well, that's doing that. Let's just take a look at the Nasdaq and the S&P 500 within TradeStation. And, you know, as I like to look at this for a number of reasons, one of the reasons I like to look at it is to look at where we are within the bands. So we're up near the top of the bands. I look at the color of the price. Green bar means buy or hold. It's a green on the weekly and a green on the month. Green on the weekly, green on the monthly. I'm still concerned that we are making higher highs, but not necessarily making higher highs on the MACD histogram, and that could be worrisome as showing less and less market participation in the rally and an aging rally. But let's be honest about this. We've been saying this back since December, and in fact, if you look at it since December, this is be very easy to not be that excited by the MACD histogram, because it's clearly been a challenge going back for several months now. So I would like to see a lack of divergence there. It still worries me. It is clearly a market at a high, but that MACD divergence may not be working as much as I would have expected it to. If I look at some of the others, I can look at the S&P 500, and I see a similar pattern. Everything is green. As well, a divergence in the MACD, showing less and less perhaps participation as the price gets higher and higher. And then that was NASDAQ. And then we just look at the Dow Industrials, the same thing. So very bullish looking from a perspective of the impulse indicator, which is the color of the price bar. All of them are green, all with some element of MACD divergence, which is somewhat bothersome, but you can't argue with success, and the market is clearly doing well. Now, real time during the day, I actually have indicators within TradeStation that I'll run that will help me monitor for evidence of viable gap ups during the day. And so I'll pick them up. There's one we'll talk about later, WCRX, if you're a bottom fisher at all, looking to take a ride on something that may have a pop from 30% from here, and clearly not oversold. IOC was another one this weekend, pending. I think there's some interest in some deals for that stock because it's not about its earnings. But we'll take a look at those later. I like to do them after the market in Morales and Catcher's program. So this gives me an idea of all the stocks that on Friday had viable gap ups. And this might be a list for me to go fishing from. As you can see, there were a lot of viable gap ups. Then the other, excuse me, those are pocket pivots. My bad. The list that had viable gap ups is also here. And all I need to do there is just click on today, and you can see that there were 45 viable gap ups. Now, some of them actually did not do well, like Walter Energy, I believe, is a viable gap up that ended up gapping up and closing down pretty much without much change from the day before. So I do like to scan these. I mentioned WCRX, and we'll look at an HGSI. It's kind of how good it looks in this chart. It doesn't look so good when you put it on a weekly chart or a monthly chart and get in a lot more shares. You can see it's a stock that's sold off a lot. This is a weekly going back to June. But there's things to like in this, and we'll talk about that later on. So I use EdgeRater for a number of things. I also can use it as a vehicle for testing various signals and back testing, and it's a great program that I use alongside with HGSI and some of the others. So next thing I like to do, so I'll just say my thoughts on the market right now. Strong market, stronger than I expected. I got a lot less contra ETF and shorts on Monday, which is why my performance was much better than what I had on Friday if I kept them, which is why you have to manage your portfolio, not do just buy and hold. This was a rising market. It was hard to lose money on the longs. Question is, when does it stop? And I think, like a broken record, everybody you'll listen to says it's going to stop soon. I just don't know when it's going to stop, so why stop making money? I'll watch it every day and see. Just out of curiosity, I don't think futures are up and doing much yet, but let's just take a quick look at them. And waiting for CNBC. And it last updated Friday, so not much there at 5 p.m. So we'll wait and see what happens there. A lot of currency wars that are going on out there at Japan and others. Gilead keeps pointing out we should be buying the Japanese market. Probably makes a lot of sense with their weakening yen. And then Moore's salvos from the U.S., threatening if they lower their yen, what will we do? So be interesting to see. I like to go into the warehouse view. I like to hopefully see it even open up. Come on. All right. And I like to go down to those Woodward and Brown groups. Now, just to remind people, for you to have this on your computer, you have to do what I said in the beginning, which is you need to go into the website under support, into the Learning Center. There you go. I'm going to kill TradeStation because I don't want to be using up my bandwidth here. And in the Learning Center, you have the add-ons. So I like to go to Major Markets Plus, and I like to go top-down view, and I like to get a sense of what's working, what's not working. No big surprise. Commodities got hurt last week with gold and silver leading to the down, gas and oil. The VIX itself was down 13% over the last 5 days. Strength in the market, dollar was flat. The Dow Jones, Nasdaq, utilities, Nasdaq 100. So as I see this, I see that large stocks doing better than things that are lots of small stocks, which is NYSE, S&P 600, and Russell 2000. And if you're watching the market, you know that it's been the big boys now that are leading. So if I look at a couple of charts, maybe not real quick, I'm going to shut down the earnings because we don't care about that here. So those who haven't been here before, these are momentum indicators with accumulation and distribution. I like to see lots of green. I like pullbacks. In a pullback, the longer term, which is the weekly, bongo, and the 13-day force stay green. And during a pullback, the shorter duration one goes to red. That's what I'm looking for. I'm a pullback investor in a stock that's in a long-term uptrend above the 200-day moving average. And that's the setup that I want. And the trigger will be something coming into the stock, making me get excited, which could be a pocket pivot, a kahuna, a viable gap up, huge volume, bullish candlesticks. I'm looking for those as triggers. Perhaps a breakout from a squeeze, a robo breakout. So here's the Dow, and we'll use this for the calculations because it's getting to be old hat by now. You've seen this before. Green candle low down there to the high of the day on Friday, hanging man looking high. And we have a 99 periods and 19.2%. That's a good year and a half on the Dow. That's a huge move. And as we look at it, we've talked about it before, we have a series of hiccups. Here is 3.6% in 8 days. here is all in about 2% in a couple of weeks. Here was another really shallow pullback, 1.1%. Here's another pullback intraday, as much as 1.8%. We have not had a good pullback since this one back here, which was began the bull rally, which was a pullback of 8.5%. We are due a pullback of 8%. Eventually, you'd expect to get one. We are running at the top of the high jump, which means we're extended. We're in a positive DMI cross. That's one of the things that I look for as a signal for buying and selling. These are pocket pivots down in magenta, pocket pivots up in blue. I use a 8-day exponential moving average. Strong stocks will stay above it. Bigelow calls it a T-line. He may make buy and sell decisions based upon the 8-day. The rest are simple, a 17, a 15, a 200. On the bottom are kahunas. In the middle one are phoenixes. Remember, the phoenix is calculated only on the NYSE, but as a good broad-based market indicator. So I see a market here that is extended, but super, super strong. I don't see a ton of volume except on the rare down day or rebalancing, but it's hard to fight City Hall and hard to go short a market that looks like that. But one of these days, it's going to stop looking so good. The Nasdaq, bigger hiccups. So the Nasdaq, its run from its green candle low to the high on Thursday was about 17% over 98 days. Also a very powerful run with a little bit deeper pullbacks. Here's a 3.6. These are rough, 3.4, 3.3, but it hasn't had a big pullback since the red candle high to green candle low here of 12%. So, at some point we're going to get something, but all I can look at this and say everything is green. You had a bunch of kahunas in the last week and a half. Market is moving up, pocket pivot on Thursday. It's extended, maybe, maybe not. The high jump's not near the top. Very bullish looking chart. S&P 500. Won't go through the calculations here. We've done it every other time. You can see the same pattern. Nice big move up. 8 above the 17, above the 50, above the 200. Only yellow on distribution and accumulation. A couple kahunas last week. Very powerful. If we look at the Russell 2000, we expect to see a weaker chart, and we do. And we see a run up Thursday of 24.4%. But the Russell, its first pullback before this run was the deepest. It was 12% over 43 days. And what have we had since we had this run? We had a 3.1, 3.9. We actually had a pretty good pullback here, comparatively about 4.5%. So those are growth stock investors. We had a lousy week the week before last, and that's because this was in the midst of this pullback in small stocks. Hard to not get excited, except with the asterisks of caution, 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 because, boy, we've had a long run, and, oh, by the way, it's April, and starting next month is May. You know the old adage, May and go away, and we also know that you can get some weakness around tax time. Now, if you go back about 6 weeks, what I remember saying about the market is I expected another pullback and then maybe a blow-off top. So we may still have a little bit run left in this market. But when I start to see the trajectory get almost perpendicular, then I'm going to know it's time to be bailing. What wasn't working, let's take a look at gold, silver, oil, volatility. The total difference here. Total free fall, 50-day above the 17, above the 8. Huge volume. Maybe this will be some type of a climax sell-off in silver on Friday, and maybe you're about to see a bounce. I don't know. Be interesting to watch, but that's a huge volume day and a big kahuna. This gray bar is a HGSI original. It's called a Eureka. And a Eureka is a special indicator, and so I don't blow it. actually it's not Eureka, it's a bingo, I'm sorry. And a bingo is looking at Wilder RSIs at extremes, percent B at extremes, and A and D at extremes. This is the throwing the baby out with the bathwater indicator. And if we can see a bingo in the market and then maybe start to see a Eureka or a Kahuna in silver in the next couple of days, that might suggest that we have a potential reversal. Right now, all I can say is a very high volume sell-off on Friday. And this actually is, I'm sorry, not gold, this is silver, this is gold. So gold getting trashed. Bears are loving it. Silver will look a lot the same, so I don't feel too bad by messing that up. Again, a bingo and a high volume. So be interested to see if this is a sell-off that can reverse. Oil, pocket pivot down, just a huge down day on Friday. With a kahuna to the downside, everything's turned red. Very bearish looking on oil. And then volatility, continues to bounce around its bottom. Obviously, it's up a little bit from the 11 range, but it's, as I've said forever and ever, these moving averages are magnets. It pulls you up, and then it blocks you. And it has struggled and failed to get above the 200-day moving average, and until it does, there's not going to be a lot of a bearish sentiment until you see the VIX move up. The dollar is not good for my stocks typically, and when I see the dollar pull back, I get excited. And you could see we've had a nice pullback in the dollar over the last 2 weeks or so. It's at a natural position to bounce off of this 50-day moving average, which has acted like a magnet to pull it back. You had a DMI crossover on Friday, and we might start to see some bullish dollar moves. That would not be great for those of us that are long in this market. So this is where I see the market at. I'm going to show you something else in different HGSI in a second. 5-day performance, the leaders were the Nasdaq, the S&P 500, the 100. No surprise, those are big stocks. The loser being volatility, gold, silver, and gas and oil. This has also taken down what had been one of the leading industries over the last several months, which are refiners. Some of them gave what might be some bottoming signals as they get closer and closer to a major moving average. All right, something that you haven't seen before with me, and I apologize because this is one of the strengths. I'm going to look at the S&P 1500. We'll start by looking at it with my chart. And people know I like the S&P 1500 because it so closely represents the market, where it's got the 600, which are small, the 400, which is medium, the 500 that are large. And it really gives me a sense of what the overall market is doing. There's other things that we can do with this. You notice that it has volume on it, so force indicators work. Now, in the program, there are these things called I keys. And let's see if we can't find these I keys. Let's go under HGSI Strategies, Woodward and Brown, Reference Library, I charts. And what these do, these start to give me a sense of what the market is doing. So this Index 1 looks at the directional movement by looking at the AD line, accumulation, 80, force index, and bongo. So if you look at the directional movement, one sees that the green is above the red, which is good, but it's sense of a pullback here with the force 2 turning red and the green coming back to the red. Now in times of exuberance in a very strong moving market, you see the separation. This is sort of lukewarm, so despite how positive the market looks like, the directional movement at best case is lukewarm. I can come look at the new highs, new lows, and what we're looking at here are if the new highs, new lows are above 0 but less than 65, you get a light green, and when they are greater than 65, you get a dark green. When they're less than 0, meaning more new lows than new highs, you get a pink thing. So you could see the high versus lows, cumulative here. The new highs continue to do well compared to the new lows. This is 13-day exponential moving averages on them. Everything is green, so that would be a bullish indicator. If you look at accumulation A, B, C, D, and E, in a bull market, one would expect the A's to be going up and the E's to go down. So perhaps not as much exuberance here as I might have thought, because this is a very exuberant market, and you can see the A's versus E's. And sort of similar to the DMI crossover, the greens, which are the A's, are above the E's, but not a huge separation. Down here, the green and the reds represent accumulation distribution day. That green is a 3-to-1 accumulation, and the red would be a distribution day. We look at the next one, so you can see where it's certainly accumulation. Go to index 4. If you look at adding the A's and B's versus the D's and E's, this looks nice. Tells me there's a lot of stocks that are in the B range, starting to separate, which is good if I want to see this market take off. When they come together, it's usually a time of weakness. That's a bullish signal. C's going down, while the E's are going down and D's are going down. That's actually okay with me. It tells me that the A's and B's are going up. The fifth key, all right, so this is looking at AD, advanced declining issues, 5-to-1 days. These would be very strong days. The second line down is looking at advanced declining issues by volume. So you had both number of issues and number of shares traded. Thursday, meaning the 5-to-1 criteria. Obviously, green is bullish, red is bearish. How about 10-to-1 extreme days? We had an extreme day on Thursday of accumulation distribution, but we haven't had an extreme day on the volume. Look at number 7. I like this one a lot because it's another view of telling me how extended this market is. And this view actually is weak, and I'm scratching my head on this one. Because what this view is looking at is it's taking that S&P 1500, just make sure, well, that shouldn't be it. Let me just see what this has in here. Make sure I'm not killing myself with this by mistake. No. Okay, so it's taking that S&P 1500. It's taken out those 1,500 stocks, and similar to what I did in EdgeRater, it's breaking them out of where they are versus, in this case, the moving average. And so what this is showing me is the number of stocks in blue trading above their 20, this is the percent above the 20-day in blue, above the 30-day, and above the 50-day. So you can see these numbers are all very high, so that tells you that's a bullish reading. But interestingly, they're not above their moving average. So the number of stocks above the 20-day moving average is a little bit higher than, the moving average is a little bit higher than the absolute number in blue. In a bullish, roaring market, as we had here, you see each of these indexes crossing above their moving average. And this is the moving average of the index here. Nothing, all right? So being above the index is more bullish than being below. And it's kind of interesting here, despite a bullish-looking market and some very bullish findings, a sign of weakness as they're below their moving average. Number 8, I'm not a McClellan expert, but you could see here that the McClellan oscillator 21 DMA has crossed above its moving average. The summation index is below the moving average. In times of big market going up, it's usually above, so that's a negative sign for the market. You can see the advanced decline line, 21-day, is just above its moving average. All right. The 9th, looking for bongos and tsunamis. So tsunamis are the large bongos, 40% change in percent V, and you could see that we are living in a period of market strength here, coming after last week's pullback with some big kahunas. And then lastly, I haven't totally mastered this chart, but just give you an idea what's in the eye charts, is these are buy-sell signals, sort of combining a lot of what we've looked at. These are 5-to-1 on AD, 5-to-1 on AD volume. These are using forced potential buy-sell signals and a number of other things. And except for the 2-day force being red, which would be consistent with the pullback, everything here looks very strong as potential buys, and you see the recent kahunas. So something interesting, and there are some old movies about the eye charts by Ron. What did I learn from that? I learned that although there's a lot of positive findings in this market, I saw a little bit more evidence to be careful. And that perhaps underlying the big moves may not be as much strength as we'd like to see. So what do I do next? Now I want to take myself down to my industries, chart of top down, 146 groups. Broadcast. Now the T1, as I've mentioned in the past, is sort of a multi-week performance, balanced technical, all technicals, but multiple weeks. I don't really care what was moving 3 weeks ago. I really want to know what's moving right now. So I look at my 2-day force, and I see I'm down to 52 groups. If I look at my force down, I'm down to 38 groups. So I start with 146 groups. So another sign that this may not be a broad-based uber rally is the fact that I have a lot of groups that are not participating. There is no question in my mind that right now the strongest group is broadcasters, and frankly, they've been strong for a while, and we've been talking about many of them, including Sinclair, as we've gone through these. Let me, I'm going to open up Market Smith and stick it behind, because those who've been here before know how much I like to go to it to look at longer-term earnings projections. One of the things, by the way, this this is an Investor's Business Daily product. I use this, Thinkorswim. They don't all have the same group structures, which is a negative. But one of the neat things is that Thinkorswim now has the same industry and group structure as we do in, did I close it off by doing that? I'm sorry. Has the same structure as we have in HGSI, so that actually I think is a big deal. Try that one more time. I've had some intranet slowness this week, so hopefully we're not going to get into that. All right. Close that one and close that one. All right. So, top-down investing. I look at the groups that are working the best right now. My little favorite, biotechnology, is part of why I had such a great week. I have some Las Vegas Sands and some MPEL. I've got some airline stock. And I see a lot of groups that we've been talking about over and over and over again. And George Lee, when he gives his talks, he yells at people nicely because they never seem to buy the things that people tell them to buy. You got to be making your own choices, but there have been some really great stocks of late. So let's take a look at this group, see if anything stands out as things you might want to be nibbling at. So I'm going to go back to my favorite chart. And by the way, you all have my chart. If you've done the updates under Jeffrey Scott Charts, and it's the latest one there, and this should, yep, all right. Let me put the earnings back, because I do care about earnings. So, Sinclair Broadcasting Group, the reason why I like Market Smith is because this tells me my next 2 quarters that show slowing growth. That will be bothersome. The last 4 have been pretty major. I know this group has been moving well. I look at the chart. This is the group line. You can see how far above it is. That's a positive. It shows the group is moving up. My high jump is at a high. I know that's a place that I typically look for a pullback. I have, you can see my candlesticks breaking above the 8-day exponential moving average. Gigantic volume, some pocket pivots a few weeks ago. So I'm going to go into MarketSmith, SBGI, and see if I feel better about its earnings. And I know this is on my buy list for Monday, and I did. It trades at a multiple of 13. It's going to have a stub that's toe year this year, but if it can keep a multiple of 10 and make $2.50 in 2014, then it's fairly valued today. If it has a multiple of 13 on 280, and just because I'm not always, I like to bring this up sometimes for the calculator to, or maybe I won't bring it up. 13 times 280, so 28 plus 5, so it's a $33.40 stock. If it makes its earnings and keeps its multiple, I would wonder why wouldn't the multiple go higher if it has that kind of its growth rate. So trades today at 26.27. I have a 12-month target, perhaps a 33, 34. That's about a 25 to 30% move from there, and that is on my buy list for tomorrow. Now, I'd rather buy it down here, and I probably won't chase it. But if I can get an intraday pullback on a market weakness and get into it midway in that bar, I might be interested. Lynn TV pullback. Got a pocket pivot. Some volume came in last week. DMI crossed. Everything is green. Again, I don't love that earnings picture from HGSI. But what if I look further out beyond this coming year? And if I look at Lynn TV, I see $1.49. So $1.50, multiple of the 10 range, $15. Again, they're 20, 25% from here. Still also very buyable. Would have been nice buying it on its pullback. So when do I get in and when did I get in? If I have this stock, I would have gotten in on here, where I would have had the next day after the kahuna and big volume coming in the stock and after it crossed the 50-day moving average. Nexstar is another one that looks good to me. Again, like the others, it's trading at the top of the high jumps. That's bothersome. It has great earnings per share growth. Trades at a multiple of 24, even pays a small dividend. So when you see three stocks right off the bat all look quite good in good runs, that should tell you that you have a wolf pack here in this industry, and you might go and look at some of these other stocks at your convenience. Next one is my favorite group, which is Biotech. And I know a few things about some of these. And you know what? I just did you a disservice. I had my raw combo set wrong. So Biotech is actually number 1, Broadcasting number 2. So we'll look at Broadcasting maybe again. So on the Biotech side, Acadia Pharmaceuticals, they had some positive trial data come out. The reason why you want to be in stocks like this is they go up on news, both of new drug discoveries, clinical trials, major meetings, and potential acquisitions. You're not in it because of their earnings per share growth. So here's a stock that on Friday you had the chance to get in around 11 with a viable gap up, and it continued to trade up. On Thursday, the rest of the day closing at about 13. Everything is green. Had a kahuna on Friday. Now it looks like it wants to refresh a little bit. I would do my research, but viable gap ups, especially coming off of a relatively stock that had been through a base, sort of a cup, and a handle, and a viable gap up, that's probably the beginning of what might be a very nice run. Amgen, I have to admit, I don't get this one. I know this company well. They're certainly a leader. They have a number of products which produce cash hand over foot. I guess they must have more of a pipeline than I see. You could see it trades at a PE of 17 with a growth rate of 11 to 15%. It's at an all-time high. It's also a time when I'd be making an acquisition if I was Amgen because my currency of my stock is worth so much. So not much in the way of earnings per share growth, but a pocket pivot here. Everything is green. Pocket pivots occurring at the tide jump sometimes fail. I'd rather buy a pocket pivot earlier in the move. I just think this stock is late in the move and probably not my favorite in the group. Gilead has been one of my favorites. If you've been on any of my webinars, you must own a lot of this because I'm always saying to buy it. You see it ran up, it's 50, then it's 17, it's running again, pocket pivot on Thursday, everything is green. This is a stock that is early in its lifespan is my guess. It is the next in line perhaps after Amgen and Celgene from a biotech stock, and you could see growth rates coming in 14 of nearly 40%. That's a $120 stock. If it grew at its growth rate, just having to grow at 20, it's worth more than where it's at. So I like Gilead, and I'll continue on pullbacks to likely add to my positions. Biotech, what a great stock. It's been a great stock, great company. They live in the land of expensive, low patient number, orphan diseases like MS. Very little pricing pressure in this marketplace. You could see a couple weeks back, Kahuna's volume in a Bible gap up. That would have been a 20-point move on a stock that had already had a big run. It's expensive. It's a great company. I'll let you make your own call on Biotech. Regeneron, I told you to buy it a couple weeks back. I'm not sure I'd be buying it today. It's getting extended. It has long-term earnings power. It's one of these stocks like Celgene, among others, probably including Biotech and Amgen, that someday you're going to look back on Regeneron and say, I wish I would have bought it for $200 a share before splits. You can see it's got massive earnings per share coming in. 6 times 40 is about 240, and it's trading now at 215. We talked about it a couple weeks ago, closer to 170. It's expensive, but someday this may seem like it's cheap. You can see it's right at the top of its high jump bar. I'd rather buy the stock, as I mentioned it a couple weeks ago, closer to its 50-day moving average. Celgene, a lot of the same story. It's got earnings per share growth. This is my largest holding and has been one that I've made myself and I think others money on over the last year, especially since about a year ago I came up and sent the load back up the truck because you could have bought it in the 50s after some analysts misinterpreted some information. It's getting expensive, and that means you've got to be at your own risk. And there are things to do around collars and protection. It's getting analyst reports into the $140, $150 range. I'll probably consider either protection or lightening myself up because it's become an oversized position in my portfolio. But what a great run, and I'm glad I've stuck with it. A lot of other stocks there that might be interesting. Look at Medivation and Onyx. Medivation had a deep pullback. Here's that Eureka. That bingo, followed by a Kahuna, trashed, exuberance, broke above the 17, would have been a great chance to buy. I did not pick that one up. I wish I would have. And it looks pretty good right now, as does Onyx, which has had just a ton of great news. When we talk about Pfizer later, if we do, and why it's got to move in a breast cancer drug, that had some great data come out. Onyx gets 8% royalties forever on that drug. It's an Onyx drug. 8% on a potential multi-billion-dollar drug with no investment. Not too shabby. Great leadership at that company. One that I have not been good on is Ariad. Still am a believer in this stock. If you bought it when it got pounded after earnings came out, then you bought it on this day here, and you got into it somewhere in the $19 to $20 range. So you're only down $1. I still think they're inclusive. Their drug is a winner. There's been some toxicity concerns. As a cancer doc, I think they're overblown, but the market has taken them seriously, and I'm sorry if you lost money on that one. All right, that's biotech. What a great place to be. Pharma, I mentioned Pfizer. So we'll look at least the first 1, 2, and number 9. So Pfizer, this boring old company, had a big pop this week, and its pop was because of Onyx's drug that Pfizer owns the licensing rights to. It's not because of earnings per share growth. Even if we look at MarketSmith and we look out a couple quarters, I don't expect to see a lot of growth coming in here, single-digit growth, so it trades at a PE 3 times its growth rate. I don't like that. I do like a 3% dividend, but what I guess are 3 pocket pivots in a kahuna. Is this going to go into a climax run? I think so. It's hitting the high jump. Obviously, a great company historically, making a pretty big change as it's moved beyond some of these large drugs that have come off patent. A nice move, probably worth watching. Here's one of my picks for the week. Now, compared to Pfizer, I guess it all depends on when you start to look at it. When you look at the stock here, it's run from 11.5 up to 14. Had a big kahuna on Friday. Everything has turned green. They had a positive data, which people said added another $1 to the valuation. A lot of analysts came out, so the stock is worth about 19 bucks. When you look at it from a longer perspective, it looks kind of crappy. And it sold off here. Now, if this stock can stay above its 200-day moving average, I think it has a great chance to benefit from the fact that, take a look at it from a growth perspective. PE on Pfizer's 14, PE here is 3. So it doesn't have much growth short term, but it trades at a multiple of 3. For that multiple of 3, you get a dividend of 3.5%. Now, truth be told, I went long this stock with options back before the New Year's, actually here where it had the kahuna. And I still think the stock has a 17 or 18-day opportunity, $18 opportunity. If it can, I would be interested in buying this here. It's clearly a bottom fishing pullback opportunity. But you notice there's no lines here. It doesn't have any short-term resistance until I get back up to 17. That's a 20% move here. Obviously, this could roll over and crash, but I would put my stops not much below that 50-day moving average. I'm not sure I risk more than 75 cents on this stock, but a big kahuna, volume, turning green. I just think it's fundamentally, or should be technically looking like a screaming buy, and I like its dividend. Santeris, another one you should have from being on my calls. Lower left, upper right, pulled backward the last couple of weeks. Looks like it's running again. Big kahuna, all green. And why do I love this stock? How about $1.25 earnings coming in next year? $1.23 on a stock that trades at $18. Give me a multiple of 20, and that's a $24 stock. And that would be a third of the multiple it gets. How could you not own Santeris? It's a small company. I'll give you that. Trades a lot of shares. I love this stock. I don't know. Can't say I love the company. I love its fundamentals, and I love the stock. All right. Who else actually tells you what they actually love when they go through review? Here's one. I don't know what to do with this stock. I own some of this. I've been in this stock for a while, so I've been ripe with profits. It's still in an uptrend when I look at the weekly. Every time it's pulled back near that 50, it's been a good buying opportunity. It's there again. Unlike the other drug companies, it's actually got earnings per share growth. Let's go take a look at MarketSmith. 20% growth on a PE of 12. So this one's discounted, but 12 times 7 is a lot more than $55. If it can meet its earnings per share growth, this is a company that I think has potential as well. Not as sexy, perhaps, as Santeris, or as stable as a Pfizer, but an interesting one nonetheless. What else we got? See the broadcast. When I changed my combo rank, Sinclair, Nexstar are the two on top. Lin TV is a lot below that. Those are the two leaders. Those are the ones I'd be looking at. Wireless telecommunication services. Metro PCS is getting a buyout. It was Sprint or Nextel, whoever, maybe it was Sprint, whoever it was, they upped their bid. I don't play in buyouts. It's too hard to figure out who's going to pull their bids or not. But, you know, it certainly was a nice bottoming pattern. But like I said, it's a buyout, so we'll skip it. Vodafone, sort of a choppy chart because it's an ADR, and they're in, are they buying Verizon? Is Verizon buying themselves out? So also sort of a acquisition story. And I'm not going to look at either of those. And back. Computer storage and peripherals. Netware appliance, an older company in the technology world. Tech has been weak. I'm looking at a couple things here. NetApp, sort of a nice place to buy as it crosses the 50 with a kahuna, huge volume, everything turning green, and a DMI crossover. Stock's been around a while. There's a multiple of 15. Doesn't have much earnings per share growth. I like my growth stocks to have growth, so I skipped it when I looked at it. Here's one with growth, Unipixel. This has been one that, you know, George Lee has been pounding the fist on table on a few times, and look why. Look at the earnings per share growth, UNXL. So it's an IPO, at least it looks like it's an IPO. It's clearly at an all-time high. It changed its stripes in December. If it's going to make $1.50 in 2014, growing 70 times, is it not worth more than $30? Yeah, I would think so, and that's what the strength is. It's obviously gotten very choppy here. Turnaround time, those are the stocks that make money, might be worth keeping an eye out on this puppy. Auto manufacturers, last week I thought Ford was going to make a move. Let's see what we got here. Let's start with Government Motors. You know, if you believe in the story, you're buying it after a bit of a saucer bottom. Couple of kahunas breaking above the squeeze here. Everything is green. This is General Motors, not a lot of earnings per share growth, and looking very similar as Ford Motor Company with a whole lot more earnings per share growth. 3 kahunas in the last 8 days. It makes money. Let's take a look at it on MarketSmith. Oh, I closed it. My bad. I'm sorry. Take a look at Ford on MarketSmith. Showing 516. I'm going to probably do this for about 20 minutes more at most, because then I'm going out to dinner with my lovely wife. We are in New York City for most of this month, and hopefully we'll get some warm weather. 20% year-over-year growth in 14 on $1.67. Trades at a multiple of 10. I bet the stock sees 17, 18. All right. Look at what's on the dark side. Let's see if there's anything here to look at. Internet, software. So casinos have had a lot of strength lately. Las Vegas Sands, which is one of the 2 that I own, had a big week, mostly because it came out and said it's going to give money back to shareholders. You know, it's not been an easy lower left, upper right with lots of small pullbacks. They've got some litigation going on in China. They've got a big position in Macau, which is where the money's coming from, sitting above the 17-day. You can see the group going up. I don't, you know, I'm not sure I'd be committing new money here, but I'm not going to get rid of it. Here's one that's also been a huge leader that I have, MTEL. Doesn't look as sexy from an earnings per share growth short term. Another big Macau play. And Vegas has been hopping. Macau, I hear, is doing the same thing. So growing at 28, 25% per year. I think if you want to be in gaming, there are a number of ways to play it, and you can pick which one is the one that makes sense to you. See if Home Builders got here, because that's a group that I think might be getting ready to run. Okay, let's look at airlines and then Home Builders. I right-click, change the index group. So I own Delta and Spirit. So I had a hard pullback down to the 50, had a doji. We'll see which way it opens. I love its earnings per share growth. I don't know if I should believe its earnings per share growth, but this has been a nice turnaround, as in most of the other airline stocks. Look at that earnings per share growth and a PE of 9. I think the airlines are different than they were 5 years ago because you've taken out U.S. Air is going to eliminate American Continental's gone, Northwest is gone. I think as you reduce supply, you actually have an opportunity of becoming profitable. So this is Delta, the one that I like. It also is Spirit. Don't like to fly them. They suck. Since I'm putting on the web, I don't want a defamation lawsuit. They don't suck. They're great planes. They're clean. I'm sure their pilots are wonderful. What I don't like about them is they charge you for everything you do. So they may be a great plane. They just suck the money out of the passengers. But you get a cheap fare. So I guess if you don't want extras like water, peanuts, and place to put your bags, it's a good airline. But what a nice move here. Pull back to a squeeze. Looks like it's breaking above that squeeze on Friday with a kahuna. That might be one you might want to be looking at if you don't have an airline stock. On home builders, are they coming back? Maybe. I did not want to do that. I want to go right-click to change index group. So just look at a couple real quick. I own a couple of these. I've had a major move since November. They have gone sideways now since they're peaking in late January. Kahuna on Friday. They make money. This is Lennar. This is Toll Brothers. They all got, they've pulled back to major support here. I think they're at a place they run again unless we get some bad economic news. Standard Pacific is a cheapy one. So you might want to look at home builders. Anything to the downside, let's take a quick look there. I don't want to look at home builders to the downside. I want to look at all the indexes to the downside. My bad. Oil, gas exploration, the big banks, equipment stocks, steel, all traded off this week, and no surprise considering what happened to energy or oil and gasoline prices. Let's see if I can find the refiners. Make sure I didn't make the good list. All right, we'll look at some refiners in a little bit. All right, so we've now done top-down investing. We looked at the market. We looked at where the strength was, broadcasters, and a few other things. What I'll do over the next 5 to 10 minutes is look at some specific stocks and specific tools that I do to find those stocks, and then we'll close it. I'm not going to go through my group inclusion filter technique. It's built into the software, but I will show you two things. That I identify the top 30 stocks. Let's just look at the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Take one more just in case. All right, so these are the top stocks from the, I ran a group inclusion filter report this morning. And it's going to HGSI, into designer. Let's make a new group. I'm going to call it WebGem GIF. WebGem GIF. I'm going to now paste that list. There's my, that's not what I want to do. Right back to that. So, my problem was I did not copy the symbol. I copied the names. So we go back here and let's paste it. There they are. So let's look at these real quick. So this, all I did here, for those who have been here before know, but I'll just show it very quickly, is I went into Tools, Group Inclusion Report. I went into my buy lists here. I checked off all my buy lists, and I wanted to see what stocks made it into most of the buy lists. The assumption being if you make it to a lot of buy lists, they're good stocks. My hope is that we've seen some of these before, so let's take a look at some of them. WebGems. So one way of finding stocks quickly is to do a GIF. And looking at the top 10. So here's Sinclair Broadcast. This was the first stock we looked at today as a broadcaster. Major move, getting extended, but I love it. LinkedIn, I don't get this one. I participate in it. I don't pay them any money. If I look purely at technicals, all green, 3 kahunas the last 2 weeks, a little bit of pullback. It wants to run again. Regeneron, that's that drug company stock that's a little bit extended. You should have bought 2 weeks ago. When we did this, I'd watch it for a pullback. Celgene, which is my big holding, which is one of my favorites, which we've talked about enough already. Nexstar Broadcasting, another leading broadcasting stock, which we've looked at already. Santeris, big pharma stock, makes money, growth. Air Methods, haven't looked at this one yet. I like the pattern. I don't know if I like the company. Air Transportation, they do a lot of helicopters and stuff for hospitals. To pull back to that 50, you got to squeeze with the 17, the 8, and the 50 coming together. 2 pocket pivots and a big, nice move up above the 8 on Friday. It looks very viable here on a pullback, ready to run if you like this industry. Home Away, expensive stock. It trades at a much higher multiple than its earnings per share. Well, its earnings per share growth is huge, but I'll show you this up here. And I was quick to discount this stock. You can see its earnings per share growth. You can see its multiple. I think this is a great story in the early innings. This may become the eBay online marketplace for those that have second homes that are looking for a low-cost, easy way to rent them. And in the way that only someone like Peter Lynch would figure this out, I'm sitting on a plane, and this woman next to me mentions that she has some rental properties that she uses only a little bit in Colorado and Hawaii. And then she was telling me about this great company that she uses to manage them and how easy it is and how great it's been for her, and it's called Home Away. I think this is in the early stage of its lifespan, so you might have to pay up for it. This is one to watch. Hertz Global, leading stock. I own some of this. I'm sure most of you do as well. Great earnings per share growth. It's a great stock. It's one which we talked about in Palos Verdes. Lithium Motors is one of the, actually I didn't think about it. I talked about this last week because it's pulled back to the 50, gapped up a little bit, a Bible gap up, a nice move this week, BMI cross, not at its high jump bar. It's one of the aggregators of auto dealers, certainly a lower left, upper right, looks really nice right now. And that's it. So that was a group inclusion filter. What else do? I might go into the program, go into all securities, go into view, and go find under HGSI strategy, and I'm getting myself lost, Woodward & Brown, reference library, and look for scorecards. Pick the demand, one-step demand volume, and this will be another way of finding leading stocks. Now, if you look at those, of the first 15 to 18, we've looked at 14 of them already. So just by a simple thing, you can just look at the top 10 or so till you get bored. Here's one I'm troubled with. I don't know what to do with Priceline. I love its earnings per share growth. I love its chart. Barron's came out and said they're going to have a lot of competition and be careful. It had a nice move off to 50 with the squeeze here. Big kahuna off the squeeze. Great earnings per share growth, even when I look out further. Growing 20, making 46. That's an $800 to $900 stock. Trades at 743. Barron's did talk, though, that they're going to have increasing pressure, so it might sell off because of the Barron's effect. Other things that I like to do. There is a view under miscellaneous, which was contributed, I believe, by David Ghilardi, called Sprinters. Again, look at those stocks. They're the stocks that we found from top-down investing. These are looking for fundamentally and technically very strong stocks, and it takes your 8,000 stocks down to 78. Quick way of looking for things to buy. See one down here I like, which is called Cons, which we talked about several times. They're the ones that not only sell electronics like Best Buy, but also mattresses. and they've had a huge run, so it looks like they're putting in a flag formation here. Everything is green, great earnings per share growth. I'm looking for them to run off of its flag, and you can see trades at a multiple 27, supposed to grow over 50 times in 2014. Even if it keeps 27 times 315, that's about an $80 stock. It trades at 42. I think the stock has a lot of pricing runway left in it. So I've looked at, let me go back here. Looked at top down, looked at gifts, sprinters. I'll talk about smart groups for a second. Looked a little bit at this. Let me do a couple more things. I'm going to do a GIF for you real quick because I think it's such a powerful tool. I'm going to look at smart groups. These are pre-done groups. They're done automatically every week, every day for you. And these are different searches. So here's the Bible gap ups. Here's the pocket pivots. These are all great ways of finding great stocks. Let's do a tools group inclusion report. Let's clear what we've done before. So under Morales and Catcher, I want to look at Bible gap ups, pocket pivots. And under Woodward and Brown, I want to look at best criteria, best of. So I'm going to do best of, best criteria, ERG 240 strong, everything else, growth stocks, HGS 100 leaders, quarterly EPS, stocks and groups moving to the upside, strong relative strength, make group report. We're going to put this underneath the one we just did, which is at Web Gems down here. And we're going to go smart group GIF. I only want the top 10. And I'm going to hit OK. And what it's going to do is going to look at each of those groups. It's going to find those groups, those stocks that have the most participation. And here were the winners. So the only couple of new ones here. But you see the same basic stocks over and over and over again. So I'm going to go down here, put my warehouse, back down here, my user group, down to the bottom. I'm going to look at Smart Groups gift, 10 top stocks. We've looked at most of them. I just want to show you this one. It was one of the ones I found on Monday with the Bible gap up. And you could see, well, it had a Bible gap up. On my trade station, I saw a Bible gap up here, so I guess it depends on how parameters are set. So I saw this on Monday. I got into the stock at the open on Monday. It's a stock I think very highly up. Perion, it's an Israeli company. They do an app called Incredimail. I have no idea how they make money. But go to here, you can see they make a lot of money. They traded a small multiple. I think that this is a potential future growth stock leader. I like being in things early, and I think this is a chance to get into it early. Look at that earnings per share growth at a small PE. Beautiful pattern here, breaking out. I like this stock a lot. Anything else that's new here? Hey, this looks like Hertz. Look at Panera. This has been a huge market leader, a little bit extended for my taste. I'd rather buy it closer to the 50. Home Depot. Lower left, upper right, pocket pivot on Friday. Looks like it wants to run again. So you can see this tool allows you to narrow the stocks down. So people like me to show them my buy list. I get a lot of feedback on that, so I'm going to put my buy watch up. I'll make a few comments and then say good night. Ashland is a specialty pharmacy stock that had a gap up this week and looks interesting. See the Bible gap up? Off of a basing stock, almost a squeeze with a kahuna, huge volume, something you might want to put on a watch list, see if it pulls back some, and then you snipe it off. NVIDIA, it's a few technology stocks that looked interesting. Why? Because it had 1, 2, 3, 4 kahunas in 6 trading days. I've listened to Ian enough times to know that's a strong buy signal. DMI crossover, everything is green. It broke above its 200-day moving average. Its sector is strong. I buy it at the open, perhaps on Monday if the market is up, with my stop right below the 200-day moving average. I'm not putting much at risk. Bunge is sort of my wild card play. Bullish engulfing pattern at the bottom. So I got a green candle low after a pretty dramatic sell-off. The stock makes money, and this is not high growth stock investing. This is bottom fishing, but I do some of that too. Trades at a multiple of 28. Going to have a big 2013, so turnaround year. I think we got an opportunity of getting in the stock after a deep pullback. I bet it comes up to its 50-day moving average, which is a nice little run from here. I'm interested in Bunge, although make sure you realize bottom fishing. These are the stocks that I liked. The only one that was a negative story was Eagle, in that it's got a DMI cross down. I love the fundamentals. I'm looking for a bounce before I get in. So what do I do with this stock? Here's what I do with this stock. I put these stocks in a watch list, all right? Then I go into a program, and we'll just look at Thinkorswim, and then we'll say goodnight. I go into my Thinkorswim, and I've got a number of different lists here. So the first thing that I do is I have some scans. These are from Never Lost Trading. And this scan here is a scan that helps me find movement, institutional movement. And I look at stocks that on Friday had a lot of buying coming in. Amgen, Ash, Bunge, Home Depot, Lennar, LinkedIn, Net Appliances, NVIDIA, WCRX, the same stocks that we just went and looked at and found on top-down investing. All right? Those have institutional buying. These actually had institutional selling. It's a proprietary program, but I start with by looking at this. I have a number of other scans that I have built. I had a lot of help from a lot of folks in building these. I might look at stocks that have pulled back to their 50-day average and bounced. And I might then see if any of these have a buy signal on it from an institutional side. Got some that bounced underneath. All right. So I may scan these. I may go and look at, were there any bullish kickers, which is a very favorable candlestick. So all day long I'm coming in when I have a chance. If my boss is listening, I only do this after hours. I never do this during the day. And I look for evidence of stocks to buy. There are all kinds of neat scans that you can do during the day, such as looking for pocket pivots. George Lee has actually gotten this to the point where he'll look for pocket pivots on the hour and on the 4 hours. I'm not as good as George in that respect. I may look for Bible gap ups, and I have one of those scans. Most of the scan work goes to the script master named Bob Meager, who is one of the strengths of our HGSI group. So I do a lot of things during the market in scanning. I also throw my stocks into various watch lists. And one thing I might want to do is take that, strung up the mover scan, and run it against my watch list of the best stocks in the market this weekend. Run the scan, and I can real time now go in the market and see, are any of those stocks that I like a lot, are they actually showing any movement? And lo and behold, I find a number of these, WCRX, NVIDIA, Network Appliances, LinkedIn, Lennar, Home Depot, Ashland, Amgen, all making moves. So I try and use these tools different ways, and I also set up radar screens and TradeStation to do the same thing. Well, this went a lot longer than I had intended. I hope I didn't lose everybody. And I will continue doing these as long as people are watching them. So have a great night, and we'll talk to you all soon. I want to do a live in the market in the next week or so. I'll be speaking with George Roberts of HGSI to set that up. Thanks, everybody. Good night. Have a great week. Bye.